Okay. All right. Well, thanks everybody for being here. I'm Cindy Nellis. I'm the director here at Penn West Clarion Small Business Development Center. And whoops, going a little bit too fast here. And I appreciate everyone being here today. As many of you are getting your businesses set up and ready to go, we want to make sure you have a basic knowledge of Pennsylvania sales tax. Your questions may be who needs to be registered to collect, what items are taxable, when does sales tax need to be charged, where do you file and pay, and what should I do to keep proper records? So today we're going to answer all of these questions and more, as well as learn about sales tax exemption, use tax, and resources to help you every step of the way as your business grows. We have a great presenter here with us. Stephanie's here with us from the Pennsylvania Department of Revenue, and she also has a team of experts here that's going to help answer your questions as she is presenting to us. I do want to say thank you to the Pennsylvania Department of Revenue for the partnership that we have with them to deliver a monthly webinar providing key information for you, our business owners. We have 4. And here's our flyer. We offer 4 different webinars, one every month for 4 months. And today we are presenting sales tax basics. Next month we'll be back on August 14th with withholding basics. And then we start the whole series over again in September. So I hope you plan to come back and join us for some upcoming webinars. I'll be sending out this flyer along with the slides and today's recording following today's webinar. A few logistics. If you have a question for our experts at the Department of Revenue, we just ask that you use the Q&A. And if you have a question or comment for me, your host, I just ask that you put that into the chat feature or chat box. And we'll be working hard to address all of your questions and comments as today goes along. I'd like to get started giving you just a quick overview about the Small Business Development Center. We are an organization here to help you start your business and grow your business. Our mission, that is our mission, and we do that by providing one-on-one business consulting services and training like today. One thing to mention is our one-on-one business consulting services are provided at no cost and it's confidential. Our training seminars are provided live in person, a live webinar like today, and we also have on-demand webinars as well. And so we encourage you to check out our statewide website, pasbdc.org, for all of the training events being offered by all of our centers here in Pennsylvania. And finally, we also have a lot of databases, resources, templates that we use in our day-to-day work that we're always willing to share with you as you identify challenges, overcome problems, plan for the growth of your business. We have a lot of great resources. If you've not connected with an SBDC, if you've not become a client of the SBDC, we encourage you to do so, and we will be providing you information on how to do that. So our statewide network is made up of 15 centers, all located at institutions of higher ed. So we say thank you to all of our host institutions. If you are looking to connect with an SBDC, identify your county and the SBDC that covers that particular county, but there is no wrong door. You will be receiving my contact information. You can always connect with me, and I'll make sure that you connect with the SBDC that covers your county. And here is again the website of how you actually sign up for our services. So you can go to sbdc.org and request consulting. And again, you can always connect with me, my email and my center email and my center phone number. All right, so let's get today's workshop started. Stephanie Schreck is our speaker, and she has over 20 years of experience in customer service. She currently works as a research analyst in the core division of the Customer Experience Center. She started her career as a phone representative with the Customer Experience Center back in 2019. Through the years, Stephanie has served in many different roles within the Bureau, all of which have allowed her to work directly with the customers of the Department of Revenue. So Stephanie, I'm going to stop sharing so that you can share your screen. And thanks for being
Thank
with us
you.
today.
Oh, you are very welcome. Thank you for having us today. All right. So hello and welcome to the new business series presented by the Pennsylvania Department of Revenue. Again, my name is Stephanie Schreck and I am a research analyst with our core area within the Customer Experience Center. First, I want to start by thanking all of you for joining us today and for wanting to learn more about how to properly collect and remit Pennsylvania sales tax. One thing we do want to emphasize in our presentation series, the cost of non-compliance far outweighs the cost of compliance. So just give me 1 second here and let me, all right. Okay, so today we are going to cover a wide range of information relating to sales tax and the nuances that go into it. We will be defining what exactly is sales tax according to the Commonwealth of Pennsylvania and how local sales tax is applied. With that, we will talk about what items are taxable, including tangible personal property, services to tangible personal property, and enumerated services. We will also clarify who must collect Pennsylvania sales tax, as well as what qualifies as nexus. We will also go over how to register for a license, how to calculate the amount of sales tax to collect, as well as to how to report and pay the Commonwealth. Next, we will quickly go over exemptions and who or what they apply to. We will also highlight use tax and when it needs to be paid. And then finally, we will wrap this module up by going over what resources are available to help you should you have any questions or need further assistance. Okay, so what is sales tax? Sales tax is a 6% tax on sales within the Commonwealth of tangible personal property, services to tangible personal property, and certain enumerated services. We will talk about each of these points individually, but before we do, let's explain what we mean by a sale within this Commonwealth. If you buy an item at retail and the item is delivered to, used, or consumed in Pennsylvania, then the sale occurred in this Commonwealth. If a business sells and delivers an item to an out-of-state location, then the sale was not made in Pennsylvania and is not subject to Pennsylvania sales tax. As you can see on the map, Allegheny County shows a 7% and Philadelphia shows 8%. This is because of local sales tax. During the 1990s, Pennsylvania legislature passed a new law imposing a local sales and use tax on certain counties. This was a tax imposed in addition to state sales tax in Allegheny and the city of Philadelphia. The rate in Allegheny County is 1% and Philadelphia is 2%. These taxes are deposited into a fund dedicated to pay for specific needs for those jurisdictions. The rules are the same, except that the local tax is based on the place of the sale, not delivery. For instance, if I buy a meal in Philadelphia, I will be charged a total of 8% state and local sales tax on the meal. If I would live in Montgomery County and order furniture from a Philadelphia store, the additional 2% local sales tax will be still added because the location, the store I made the purchase was in Philadelphia. So now that you're a little more familiar with what exactly sales tax is, let's review some individual taxable components. All right, so first off is tangible personal property. Tangible typically means something material or physical. Tangible personal property is generally physical property that can be touched, such as furniture, clothing, and vehicles. However, there are items that cannot be felt but are still considered tangible properties, such as electronically delivered software. It's distinct from real property or real estate in that it can be moved from one location to another, while real property is permanently attached to a single location. So these are some some of the taxable items listed in the law. Some of these are clearly tangible, such as greeting cards, helmets, books, while others, like telecommunications, are a little bit less black and white. There are also examples here on the screen that are not specifically in the law, but they help to illustrate what kind of items constitutes tangible personal property. And you can see how wide ranging some of these items are. If you buy any of these or similar items in Pennsylvania, or you have them delivered into Pennsylvania, they are taxable tangible personal property. We do have a more complete listing available in our REV 717 guide. Okay. Digital goods. With the passage of the Act 84 in 2016, certain digital products are now included in the definition of tangible personal property. These products include videos, photographs, books, any otherwise taxable printed materials, applications, games, music, and some other audio. This could be including satellite radio, canned software, including support and any otherwise taxable tangible personal property. These items purchased and or used in Pennsylvania are taxable whether electronically or digitally delivered, streamed or accessed, and whether purchased individually or through a subscription. And this also does include any maintenance or updates that would be required. All right. There are certain items of which sales tax is excluded per the sales tax law. The exclusions include some of the following. We have wrapping materials that are needed to deliver property, such as like bubble wrap, pallets used to transport goods, shrink wrap, and so on. Anything wrapped with the package or used to deliver the package is considered exempt. Grocery store food, unless it is considered ready to eat food, such as a sandwich from a deli. Oops, sorry about that. Clothing that is considered everyday wear. Everyday wear items are articles of clothing that are not required as a condition of your employment, so like a uniform, and could be considered to be your regular clothes. These everyday wear items are not subject to tax. Caskets that a funeral director uses in conjunction with funeral services are exempt from both sales and use tax. Regular unflavored water, including mineral waters, are also exempt. And then we have our sales for resale. This is a big one for many businesses. Industries like department stores, grocery stores, automobile dealers are in the business of buying goods and reselling the same goods. In Pennsylvania, if the inventory or goods that you are buying is for resale, you are not required to pay sales tax, given that you will charge the tax to the end customer. Sales tax is also imposed on services done to tangible personal property. Basically, the rule is if the item that needs serviced is taxable, then that service itself is also taxable. For example, if my watch breaks, and I take it to a jeweler to have it repaired, that transaction is subject to sales tax. Since watches are subject to sales tax, or AKA taxable, then the repair service needed to fix my watch is also subject to tax. So on this slide shows some other examples of services that are taxable, which may help you better understand this concept. Take a note of the first item, wrapping or packaging tangible personal property. Now, I know I just used wrapping materials as an example of an exempt item. This is considered taxable because we are not mentioning it being used specifically by the seller to wrap or package items incidentally to delivery. So the example on this slide is referring to the service such as wrapping tangible personal property or gift wrapping. Enumerated services are those services specifically taxed. These are not tied to a tangible personal property, but are specifically identified for taxation by legislation. A lot of these can get very involved and have special rules on how to determine taxability. All of these items are specifically outlined in the REV 717 that I mentioned earlier. So we recommend that you check that out if you are providing any of these services. Excuse me. So now that you know what sales tax is and some examples of items and services where sales tax is applicable, let's dive into who should be collecting Pennsylvania sales tax. The tax reform code states every person who maintains a place of business in the Commonwealth to sell tangible personal property or to perform taxable services is required to be licensed for and to collect sales tax from its customers. In other words, the law requires Pennsylvania businesses to collect the tax from the customer at the time of the sale. What it means to maintain a place of business has changed over the last several years. For an entity to have physical presence, it means exactly that. To fall under this category, a business must have taxable sales and has some type of physical location like an office or a place of business, an employee. This is including representatives or an independent contractor, storing inventory, renting or leasing properties or tangible goods, or making deliveries to a Pennsylvania address. Meeting the qualifiers for physical presence means the business would be maintaining a place of business in this Commonwealth. This is going to apply to most of you. For the majority of you attending today, have a physical presence in Pennsylvania. Let's quickly revisit bullet point 3 here. Goods or inventory in a warehouse. Under Pennsylvania law, inventory stored in a warehouse, a fulfillment center, or any other location within Pennsylvania creates physical presence with the Commonwealth. This means that retailers who have inventory stored within Pennsylvania are required to register to collect and remit Pennsylvania sales tax on any sales made by the retailer directly to Pennsylvania customers. We are highlighting this one specifically because many people who sell online are not aware of this. So even if you are selling through a marketplace facilitator and the goods are stored in one of their warehouses, but the end customer is a Pennsylvania resident, you have a physical presence in the state. Speaking of online sales, this is a perfect way to transition into economic presence. Even though an entity might not have a physical presence in Pennsylvania, they may have what's called economic presence. So the tax reform code defines maintaining a place of business within this Commonwealth to include having any contact within this Commonwealth, which would allow the Commonwealth to require a person to collect and remit under the Constitution of the United States. This statement is referring to economic presence. If a business makes $100,000 or more in annual Pennsylvania gross sales, then that business would be considered to have an economic presence and they must collect and remit Pennsylvania sales tax. In 2018, the Wayfair versus South Dakota decision opened up the legal door to expand the concept on nexus beyond mere physical presence. In the Wayfair decision, the Supreme Court ruled that as long as the state had a uniform tax rate, did not apply the new law retroactively, and provided some sort of administrative assistance in making tax determinations and filing, economic presence is an acceptable standard in making businesses collect sales tax. The effort is to level the playing field for all businesses. In short, what we are talking about here is out-of-state businesses that sell to Pennsylvania customers and establishing a consistency in the requirements to collect and remit sales tax. Previously, when nexus was determined solely by the physical presence, these businesses would have a huge advantage over Pennsylvania brick and mortar locations as they were not held responsible for the collection and remittance. So with the new law, out-of-state businesses are now treated similarly to Pennsylvania business locations if they make over the $100,000 in gross sales into Pennsylvania annually. I use the word nexus a lot here, so let's quickly discuss what that means. So nexus is when businesses have either a physical or an economic presence in Pennsylvania. Sales tax nexus is just a fancy way of saying a significant presence in the state. If a business is considered to have nexus in Pennsylvania by having either physical or economic presence, then they must collect sales tax on all taxable sales to Pennsylvania customers. Okay. So sales tax is generally imposed by 44 other states. These states have similar concepts of physical and economic nexus as well. The main difference between these states and what was just covered for Pennsylvania will come down to the thresholds for economic nexus. Excuse me. Some states have a dollar threshold similar to Pennsylvania, although the dollar threshold can vary. Some states have a number of transactions or dollar thresholds, such as 200 transactions or $100,000. To round it out, some states even have a number of transaction dollar thresholds as 200 transactions to 500,000 to establish their economic nexus. Unfortunately, we cannot provide information concerning the administration of other state taxes, but there are resources available online to help you determine if you might have a filing requirement for another state. The next area we will talk about is exemptions. So unlike exclusions, which are usually items never subject to sales tax, an exemption is situational and depending on who purchases the item and how the item is used. Pennsylvania law allows businesses to claim exemptions from sales tax for several different reasons. The exemptions are centered on the certain business processes, and their taxability depends on who bought the item and how it is used. To claim an exemption from sales tax, you must complete the REV 1220 and disclose a valid basis for the exemption. So please keep in mind the purchase must be consistent with the exemption reason being claimed. This form must be filled out to completion, and you must select if the exemption is to be used one or multiple transactions. Fill in the name, address for both the seller and purchaser, and select the exemption being claimed. Additionally, the burden of proof falls on the shoulders of the person claiming the exemption. You must supply supporting documentation when appropriate to support your exemption claim. This form, if the form is missing, any of this information or the purchaser's signature, the seller has the right to object to the exemption certificate and charge tax. as it will be considered incomplete. So let's go over some reasons that you may claim an exemption in Pennsylvania. Excuse me. The first reason you may qualify for an exemption is if you are exempt entity such as a government organization or a qualified nonprofit. Items purchased by state and federal agencies, as well as Pennsylvania school districts, are exempt from sales tax in most cases. Catholic and private schools will receive, it's called a 76 number to claim an exemption. Regarding construction contracts and the exemption is limited to the building, machinery, and equipment, not to the governmental organization. For nonprofit organizations or institutes of purely public charities, there is a limited exemption on purchases. An example of institutes of purely public charities include not-for-profit hospitals, volunteer fire companies, and churches. These organizations that qualify under this category are given a 75 sales tax number by the department. When we say limited exemptions, we mean that there are certain requirements that really must be met to be considered the purchase exempt. The items or services purchased by those entities must be directly used in their charitable purpose. For example, let's say a church purchases a lawnmower to use for maintenance of their property. They will need to pay sales tax on this purchase because the lawnmower is not directly used in their charitable purpose. Additionally, all exempt items must be purchased in the name of and from funds from the exempt organization. Please note that if you have a 501c3 status with the IRS, you do not automatically qualify for this exemption. And you must file an application, the REV 72 with the department to determine your state exemption eligibility. If you are a business operating in the Keystone Opportunity Zone, Strategic Improvement Zone, or similarly designed state economic zone, you are given a sales tax exemption on goods and services used exclusively in that zone. Purchases made for items or services used by the business outside of these areas will need to include sales tax. Businesses qualifying for this exemption will receive a 72 number from the Department of Community and Economic Development. So next, you'll want to consider how the item is being used. If an item is being used directly and predominantly by the business in an exempt business process, it will qualify for an exemption as well. Exempt business processes include manufacturing, mining, dairying, farming, shipbuilding, and timbering. Direct and predominantly used means that the item is used directly in the exempt business process over 50% of the time. So an example of this is a manufacturing entity purchases a forklift that is used in pre-production activities like moving raw materials, production activities like moving work in process from one workstation to another, and 3, post-production activities like loading the finished goods onto a truck. For the forklift to be exempt from sales tax, it must be used over 50% of the time in production activities. If it is used more than 50%, 50% of the time in the activities that are not considered a part of the actual manufacturing process, then of course there would be no exemption. And then finally, if you are buying goods and services for resale, you can also complete the REV 1220 to receive an exemption on the items upon your initial purchase, since you will be collecting this tax from your customer. Most of the time, this applies to retailers or wholesalers who are purchasing items for the sole purpose of resale. If you are deemed a retailer or wholesaler, you will be issued an 8-digit number by the Department of Revenue. So for example, I own a car repair shop, and I am working on a car for a customer that needs a new part. I ordered the part from AutoZone. The part is being resold to the owner of the car once it is installed. Since I am purchasing the part for the sole purpose of reselling to my customer, I would supply a completed REV 1220 to AutoZone so that it would not pay the sales tax at the time of my purchase. All right. We talked earlier about tax paid, purchase resold, TPR credit. That credit is claimed by those businesses who are buying items without the intent to resale and later end up doing so, unless, of course, you're in an industry that specifically identifies in the law, such as barbers and beauticians. The difference between this and the TPPR credit is that in this scenario, I am not using the part for use in my shop. Therefore, I should not be paying the tax up front as I am intending to collect it from my customer. Right. Side note, barbers and beauticians are required to pay sales tax on all purchased of equipment, materials, and supplies, regardless whether the property is purchased for use in a performance of service or for resale. So if you would fall into this category, you must pay the sales tax, and then you would claim the TPPR credit on your sales tax return. All right. So when a seller does not charge Pennsylvania sales tax on a taxable item to a Pennsylvania purchaser for any reason other than a valid exemption, it would then become the responsibility of the purchaser to pay the tax directly to the Commonwealth. This is called use tax. Use tax is the counterpart to sales tax, and these situations most likely occur when the seller has no nexus in our state. As we just stated, use tax is sales tax not collected by the vendor or seller at the time of the purchase, and is the responsibility of the consumer. Examples of when use tax is due is if your business makes purchases of taxable items over the internet through a toll-free number, from mail-ordered catalogs, or from out-of-state locations that are not charging Pennsylvania sales tax. You, as the purchaser located in Pennsylvania, must essentially make a payment to cover the amount of sales tax that should have been included with your total at the time of the purchase. This is the purpose of use tax again. And the tax rate is the same as sales tax, 6%. State plus a 1% local for items purchased or delivered or used in Allegheny, and then of course 2% local tax in Philadelphia. Most businesses believe they save money by making tax-free purchases from out-of-state vendors, unaware that these transactions are often assessed upon audit by the department. So since assessments include interest and penalties on top of tax, businesses in these situations have increased operational costs by not voluntarily addressing use tax obligations. So now that we know who needs to collect sales tax, let's discuss how to go about registering for a sales tax license. So in order to collect sales tax, you must have a license issued by the Pennsylvania Department of Revenue. License performs many functions, including demonstrating to the public that the business is duly licensed agent to collect sales tax on behalf of the Commonwealth. It should be noted that if a business has collected sales tax without a proper license, they should coordinate with the Commonwealth to remit the money immediately, which means 30 days within collecting it. So to register and obtain a license, you will need to complete the Pennsylvania Online Business Tax Registration application. If you are a brand new entity with no pre-existing business tax accounts, you would use the business registration hyperlink right from the MyPath homepage. You would complete this without logging into a profile or creating a profile. Now, if you have any pre-existing business accounts and just simply need to add a sales tax license, you would log into your MyPath profile and use the business registration hyperlink under the More tab. The reason that you would log in if you're a pre-existing entity is because then you wouldn't have to refill in your business information on the application. Makes it a little simpler. Please be aware that citations are issued for operating a business without a valid sales tax license. Under Pennsylvania law, sales tax monies collected by the business on behalf of the Commonwealth are defined as trust fund money. The money does not belong to the business. It belongs to the Commonwealth. It must be handled accordingly to the law and to the department regulations. A business must meet the timely reporting and filing requirements. Proper handling of trust fund money helps secure success of the business by avoiding costly penalties. If you are an entity new to business in Pennsylvania, we recommend that you visit www.business.pa.gov for all of your registration needs. This is a one-stop shop website, was established to help new businesses get up and running beyond just setting up their tax accounts. Okay, so now that you've signed up for your sales tax license and are ready to make some sales, you need to know how to collect and remit it to the department. Of course, the first step to collecting sales tax is knowing the amount that needs to be collected. As mentioned previously, sales tax is 6% of the total purchase price, including warranties, which represent prepaid taxable services to taxable tangible property, delivery, or other services. An example of another type of service that would be included in the purchase price would be the charge for car detailing included in the purchase of the automobile. When it comes to deductions, basic rule is any cost of business incurred in selling a taxable good or service when passed on to the purchaser is considered to be a part of the taxable purchase. Okay. So for example, if you take a look at your phone bill, it may list in a line item called a universal service. This is a charge that telecommunication providers may add to your bill to recover their cost of federally mandated contributions to the universal fund. It is a cost of doing business for them, and they may elect whether to bill their customers for this. Amounts representing on-the-spot cash discounts, employee discounts, volume discounts, store discounts, such as like a buy one, get one free, a wholesaler's or trade discount, or store manufacturer coupons, shall establish a new purchase price if both the item and the coupon are described on the invoice or the cash register tape. So a recent court case, Myers versus the Commonwealth, affected how general coupons are handled. The court found the regulation does not require the coupon related to the particular taxable item in order to reduce the purchase. Only the item and coupon be described on the receipt or invoice. As the court noted, if all items on the receipt or invoice are subject to tax, then it is the responsibility to determine the coupon applies to the taxable items and the purchase price may be reduced. Conversely, when all items are not taxable and the coupons do not identify to the taxable items, the description is inadequate and the amount of the coupon cannot reduce the purchase price. To put it simply, in order to reduce the taxable purchase price, the receipt must identify what products the discount applies to, or all items on the receipt must be taxable. So if the coupon lists a specific item and the receipt has both taxable and non-taxable items, or if it is a general coupon just saying a percentage off the total, but all items purchased are taxable, then the discount is taken before tax is applied. Otherwise, the discount will be applied after the sales tax is applied. All right. So sales tax returns and payments must be filed electronically. There are a few methods in which you can do this. We have an online option, which is our MyPath website. We do still have a phone option and are using a third-party vendor. We strongly encourage you to use our online MyPath portal to file and pay your sales tax amounts. Not only are you able to file and pay for the current year, but you are also able to view any previously filed returns. You can access notices that have been issued from both, the MyPath system. You can also go back and look at notices issued in our old eTide system. You can request statement of accounts that are available immediately after you submit your request. You can send a message to the department and more. Another very important function is that you can grant permission to others like your CPA or bookkeeper to also be able to view the information regarding your returns. You can access the MyPath portal at www.mypath.pa.us or simply visit revenue.pa.gov and click on the icon that says MyPath right from the homepage. You must create an online account to utilize the options for the business taxes. The department does have some third-party vendors who will be providing some e-filing software for some taxpayers who do not wish to use the department's options. A list of approved software vendors is available on the department's website at www.revenue.pa.gov. Some important things to remember. The PA3 forms are not available for download from the internet. The use of other tax forms could result in a non-filer notification and/or the misapplication of a tax payment. Per regulation, taxpayers who are making payments of $1,000 or more must remit them through electronic funds transfers, also known as EFT. A failure to comply with the electronic funds transfer remittance requirements may result in an assessment of a penalty equal to 3% of the total tax due, but not to exceed $500. The penalty may be imposed on all payments of $1,000 or more that is not presented to the Department of Revenue by an approved payment method. So if every quarter you're sending a check for over $1,000, you are going to get hit with the EFT penalty every quarter. Okay. So when you initially register for a sales tax license, your filing frequency will automatically be set up as quarterly. Near the end of every year, the Department of Revenue reviews the average of the current first and second quarter sales, as well as the prior third and fourth quarter sales to determine if your filing frequency needs adjusted. So our semi-annual filers are those who have an actual tax liability is $300 or less annually. So semi-annual returns are due August 20th for the January through the June period, and then of course due February 20th for the July through December period. Quarterly filers are those who with actual tax liability is less than 600 per quarter, but greater than 300 annually. Quarterly returns are due the 20th of the month following the end of each quarter. So that means April, July, October, and January. Monthly filers are those actual tax liabilities is less than 25,000, but greater than 600 per quarter. Monthly returns are due the 20th of the month following the end of each calendar month. This is a lot of information being thrown at you, but thankfully the department puts out a yearly due date calendar called the REV 819, which is broken down by frequency to help you remember when your filing due dates are. You can find this form on the department's website. Now, if your actual tax liability is 25,000 or more per quarter, you may be required to remit what we call an accelerated sales tax prepayment. These are basically an advance tax payment made for those who have a higher liability for the year. We will have more information available on accelerated sales tax prepayments in the future, but we have found that typically this is not something a new business needs to be concerned about right away. So the Department of Revenue does offer vendor discounts for timely filed returns and payments. This discount is limited to a flat tax rate depending on your filing frequency or at least 1% of the tax collected, whichever is the lesser of the two. If you collect sales tax on an item that you previously paid sales tax on, you can claim a credit for those sales tax paid when you originally purchased the item. This is called tax paid purchase resold credit, or the TPPR credit. This credit should be taken within 3 years of the original payment of tax on the item which has been sold. It is important to remember that this credit is not for those items that were purchased with the intent to resale. We talked about the exemption certificates a little while, which covered those scenarios. All right. So businesses who are registered for sales tax may remit use tax as part of their sales tax return. If you are familiar with the return, this would go on line 6. Businesses with ongoing use tax liabilities who are not registered for sales tax should apply to the department for a sales and use tax account through the MyPath system. Businesses with infrequent use tax liabilities may use the department's online use tax payment option right from the MyPath homepage, which again is a non-logged in function. Individuals or sole proprietorships may also use line 25 of their PA 40 return to pay use tax. So let's recap some of the general rules that we just went over. Filing and remittance occurs at different intervals determined by the department. You can either be monthly, quarterly, or semi-annual, depending on the size and the sales volume of your business. First-time filers will always be set up as quarterly until the department has a chance to review your sales activities to determine if the frequency needs adjusted. The due dates will always be the 20th of the month following the last day of the reporting period. Again, the form REV 819, which is available on our website, is there to help you to remember when your due dates are based on your designated filing frequency. Local and state tax are filed together on one report. One thing that a lot of people are not aware of, but is very important, is that even if you have 0 sales for a certain period, you are still required to file a 0 return. Think of it as an informational return. You're letting the department know that you had no sales for that period. You must do this in order to stay compliant with the department. No discount is granted on returns filed late. Penalties and interest will be added to late filings as well as late payments. Interest for any late payment of tax, interest is calculated on a daily basis. It is calculated by taking the amount of tax due, multiplying it by the number of days past the original due date, and then by the daily interest rate. The annual interest rates vary by year, so you want to use the REV 1611 to find out more information regarding how this is calculated. Penalties, the penalty for past due filings on sales tax is 5% per month from the date due until the date filed, but not to exceed a 25%. If an underpayment penalty is warranted, it is imposed at a rate of 3% 3% a month on unpaid tax balance from the date filed to the date paid, not to exceed 18%, and no case shall in addition be less than $2. If the proper tax, interest, and additions are not remitted, the department will make an assessment. All right, so resources. Sales tax is one of the most, if not the most complicated tax for taxpayers to deal with. I know that we have thrown a lot of information at you today about an already very nuanced topic. So let's discuss some resources that we can offer, which are available on our website. Majority of these will be the same resources that I have mentioned earlier, and we serve as minders onto what is available. All right, so we mentioned this one a few times throughout the presentation. The REV 717, or the Retailer's Information Booklet, is a great guide to determine goods and services subject to sales tax. It also provides some information on some of the other topics we discussed here today, as well as topics for petitions for assessments, construction contracts, motor vehicle lease tax rates, and more. Here we have the REV 588, starting a business in Pennsylvania, a guide to Pennsylvania taxes, excuse me. This is a fantastic resource that touches on all the basics for new business owners. This guide includes information for sales tax as well as registration, employer withholding tax, and other items that going into owning and operating a compliant Pennsylvania business. The REV 819, which we talked about when discussing due dates, is the schedule put out each year that breaks down the filing and payment due dates by the filing frequency. Again, this schedule also outlines, all the period end dates and the due dates. It even provides a little bit more information regarding our accelerated sales tax prepayment requirements. The REV 1611 is the form used to calculate the interest on all tax due after January 1st, 1982. Earlier, we mentioned that interest is calculated on a daily basis. It is calculated by taking the amount of tax due, multiplying it by the number of days past the original due date, and then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rate for any given year is established by the U.S. Treasury Secretary and is effective on January 1st of each year. All right, so we do strongly encourage all of our customers to use our online customer service center. To do this, you can visit the URL listed on the screen and click the customer service icon directly from our homepage. Here you can find thousands of answers to frequently asked questions. These responses are updated regularly to ensure that the information you are receiving is correct, is accurate and relevant. If you are unable to find an answer to your question through the FAQs or any of the general resources, You do have the option to submit a question to the department. This feature allows users to submit either a general taxability question or a more pointed question regarding a specific scenario to a trained representative who is specialized in sales tax. We will review the submission and usually respond within about 72 business hours in a process that is similar to receiving an email. All right, so lastly, we won't forget the Customer Experience Center. We are the call center for the Department of Revenue. Here you will be able to speak to a representative skilled in whichever particular tax type you pick from the menu prompts. Our regular business hours are Monday through Friday, 8 a.m. to 5 p.m. If waiting on hold is not something that you enjoy, we do have a scheduled callback feature. You can locate this on our website. And then lastly, we do have a voluntarily disclosure program provides an opportunity for businesses and individuals who have recently become aware of their Pennsylvania tax obligations to voluntarily come forward. In return for coming forward voluntarily, filing their tax returns, clearing their tax dates, taxpayers are only responsible for the payment of tax and interest. Penalties for most taxes administered by the department will be waived when the requirements of the voluntary disclosure agreement have been completed. In addition, the taxpayers are only responsible for satisfying tax liabilities up to 3 years, plus the current year, unless sales tax was collected from the customer and not remitted. Unregistered taxpayers with the Department of Revenue who have collected business trust fund taxes but failed to remit these taxes may be eligible for the voluntary disclosure program. However, such taxpayers must remit taxes for all years collected. They will not receive a limited look back, and penalties will be waived for those years. If the taxpayer is currently registered or was previously registered with the department, they are not eligible for the voluntary disclosure program. Taxpayers who the department has contacted and pursued collection actions against and investigated also are not eligible to participate in the program. Taxpayers interested in participating should send an email to the email address listed here on the slide to request a case number. The email should include the contact information such as mailing address, phone number, and etc. for the person requesting the case. Taxpayers pursuing a VDA should not register on their own for the taxes for which they are coming forward. The Voluntary Disclosure Office will register the taxpayer at an appropriate time. If you are registered and currently not charging tax correctly, you should correct this issue ASAP, as audits generally go back 3 calendar years, and you could be assessed the tax that is due plus interest and penalties. All right, so that wraps up our module for today. Hopefully this was informative and helpful. If there's any additional questions, just please throw them out there in the chat. Thank you.
Thanks, Stephanie. That's great. I know that there are some questions that did not get answered, and I wasn't sure if you or your team would want to address those directly. While we kind of talk through that, I'm going to throw a poll out to everybody. Just a 1-question poll. Let everybody answer that. So there was a question about an item for resale. I wasn't sure if you guys wanted to kind of address that directly.
Hey, this is Ben. Can you hear me? I'm not sure how
Yes.
this works on my
Yep.
desktop.
Yep, I hear you, Ben.
All right, pretty good. What was the question?
So items for resale, if I purchase a computer from D&J and I resell it to a customer, I don't have to charge them sales tax because I paid it already. That's a question. Yeah, that's a question.
So the answer to that would be that you would not pay tax on the computer when you purchase it for resale. And you should collect tax from your customer when you sell it to them. If you were to have paid tax on that computer, that would be that situation where a tax is paid, purchases resold credit could be taken on your return.
Great, thank you.
And then another one just came in here with consulting services. So consulting services are a little goofy. If it's just a pure consulting service where you're not providing any tangible personal property, then that service would not be subject to tax. However, if that consulting service is associated with the sale of tangible personal property, so we see this a lot with software, where a vendor comes in, they provide some consulting services to say, these are the software products that you need, and then they sell those software products, then that consulting service is taxable as the purchase price for the software that was sold. So if it's just pure consulting, you don't provide any tangible personal property, the answer is no, it's not taxable. But if it's in conjunction with the sale of tangible personal property, then it would be subject to tax.
Great. Okay, is a
Um,
website considered a tangible property?
Yes, generally a website is going to be considered tangible personal property, either as an access to canned computer software or as a combination of various digital products, the things that go into making a website. We are going to publish some information sometime, hopefully later this year, concerning digital goods software, and that website information will be part of that as well.
Okay, is packaging for the final product taxable?
Any packaging that you purchase that is incidental to the delivery of your product to a customer is going to be exempt. The question with the like the final packaging comes down to the equipment that's used for a manufacturer, but any of the packaging materials itself are going to be exempt. John, the definition of tangible personal property can be found in the tax reform code. It's in Title 72, Section 7201, specifically paragraph M. That's where our definition of tangible personal property can be found.
Is that tax code on your website?
Data processing and hosting. Generally, data processing it's not going to be taxable if you are providing that service to the customer. They hand you data, you do something with it, you return it back to them. Now, if you provide them software to do the data processing, that would be taxable. And anything related to a hosting charge at this time is not subject to sales tax.
So Ben, going back to the other question, when you talk about tax code and you reference specifically where it is that tax code found on your website?
No, so the tax code itself is not found on the department's website, but the tax reform code is available on the PA legislature's website. And there are some external companies that provide the PA code and bulletin where you can access that.
Okay. So Matt has a question. If we have an e-commerce business and sell goods to someone outside of PA, do we need to collect Pennsylvania sales tax or sales tax in the state of the good, or sales tax in the state the goods are delivered to?
Yeah, for pretty much all states' sales taxes, the sales tax is going to be due based off of where the product is delivered to. So sales tax is a destination-based tax. So for it to be subject to that jurisdiction's tax, the product or service has to be delivered there. So if you're in Pennsylvania and you're selling to another state, you don't have to collect Pennsylvania sales tax, but depending on their economic nexus standards, if you don't have a physical presence there, you may be required to collect that other state's taxes. And then if you register for a business starting October 1st, 2024, you will be set up quarterly, and that first quarter return is going to be due January 20th of 2025.
Great, thank you. So Joseph knows plants are taxable. His question is, are vegetable or medicinal plants taxable?
So are they for gardening? I'm gonna guess.
We'll assume, yes.
Well, I do think we have something in there for vegetable plants that are purchased with food stamps. Those would not be subject to tax. So if the plant, those are purchases that are eligible for SNAP benefits. If they're purchased with SNAP benefits, they're not subject to tax. But other than that, any plants, medicinal or food wise, would be subject to tax.
All right, I think we got them all.
All right.
I'm gonna stop the recording.